Hello and welcome to the Crypto Jungle, your source for no-nonsense fundamental and technical crypto analysis. So in today's video, we're going to do a market update. I want to take a look at Bitcoin, but realistically, what I want to take a look at is traditional finance. I want to take a look at the NASDAQ. The NASDAQ is kind of the gatekeeper to the bull market right now. So we're going to focus a little bit heavier on the NASDAQ, and then we'll go into Bitcoin and the rest of crypto. Bounce potential. We've been talking about a bounce potential for weeks, and that bounce potential is becoming more of a potential. We're seeing some bullish price action off of the lows. We've been in serious oversold conditions for weeks now, and it looks like there's a sign of a recovery. So let's not talk about it anymore, and let's just dive straight into the charts here. Taking a look at the NASDAQ. So we have been talking about traditional finance and its correlation to crypto markets for a while, a good like 18 months now. We are one and the same. Crypto is basically just a tech stock on leverage. That's how the public perceives it. It's a highly speculative asset, and it moves speculatively in correlation with equity markets. So if you're not in the Discord, we've been kind of talking about, this NASDAQ setup right here, bull div on the weekly. This was in the VIP section of the Discord, but we've been talking about it on the public side as well. So that is a weekly div coming down here at this shakeout. This shakeout, by the way, is a total distance of about 33, we'll call it 34%. 34% drawdown. That's a very large shakeout in an index. And there's been an incredible amount of bearishness. Tons and tons of bearishness in the market. To be fair, I am still bearish, but I've been talking about how I'm very bearish on the macro, looking for bounce potential on the short to medium term, and that's what we're kind of seeing here. So there's the bull div right there on the weekly time frame. Now what we need to be prepared for mentally is kind of a retest of some of these levels. So if we hold this level right here at if we get the weekly close above this level, we don't have very far to drop. It's not a big deal if we test this kind of general range here. Let's actually go down to a smaller time frame here on the NASDAQ. Let's go check out the daily. So yeah, this is the level of the reclaim. We want to stay on top of this level for us to remain in this bullish trend on the NASDAQ. The next area of resistance to watch out for on the NASDAQ, excuse me, it's going to be this area back here. You can see it was kind of reclaimed and tested here, and we kind of bounced off of it at this point. So watch for resistance here, and then I would also watch, if we do, you got to take these one level at a time, but if we're able to overclaim this level, your next resistance after that is going to be up in this general range. So overtaking of resistance, it's all about the reclaim, retest, reclaim, retest, reclaim, retest. So what does that look like? Basically, we have reclaimed and we're going to have to retest. Then we can rally up, we'll hit some resistance, reclaim, retest. Rally up, hit some resistance, reclaim, retest. If you see that, it's looking really, really good, really, really healthy. Ultimately, I do think that this is just a recovery rally. This is kind of like a dead cat bounce in the NASDAQ. So please be careful on crypto Twitter. Please be careful on YouTube. If you see the NASDAQ up at these levels, I'm telling you right now, the whole market is going to tell you we're in a bull market and we're going to 100K, okay, in terms of Bitcoin. I just don't see that being the case. I think that there are too many fundamental drivers of the equity markets that are working against it. And the simplest is money is more expensive. Okay, money is getting more expensive. When money becomes more expensive, it leaves the stock market and stays in cash. So do keep a level head out there. I don't think that we have seen our macro cycle bottom in Bitcoin. The macro cycle bottom is not something you're going to really want to get too excited about, honestly. But let's go take a look at the king of all crypto, Bitcoin. All right. Before we get in, see what we got in the chat. Get rectals. Personally don't think we've bottomed. we will have bearish rallies. However, I'm looking for a sweep of the BTC lows. There's still way too much crypto moon tubers out there, other degens, 100% agree. There's still hope out there. When there's hope, we're not done. We're not done. This range reminds me of similar as 30K. In the meantime, scalps are always here. Don't get me wrong. Of course, you can play the smaller time frames. If you're an inexperienced trader, I don't recommend that you spend too much time on the smaller time frames, because that's where the highest talent is required, the highest discipline is required. Typically, new traders don't have a lot of discipline, so you need to stick to the higher time frames, stick to, you know, the daily, honestly, stick to the weekly. If you're a new trader and you're just wanting to learn like when to buy and when to sell and not necessarily use a stop loss, you're only going to take like 1 or 2 trades every 1 or 2 years. That's usually not what new traders are after. They're after action, and that's why 95% of traders lose money, is because they can't identify their trading style and match it up with the trading strategy. So, you know, my advice, if you are not the type to even know what a stop loss is, you got to be looking at weekly charts, and you're not going to have a trade for a while. Very, very, very long while. Apparently Fed balance sheet increased, so they haven't even started quantitative tightening yet. Yep. So, you know, that's a very astute observation. So thank you, Chris, for that. Chris is in the Discord, by the way, ladies and gentlemen. So there's a lot of really constructive conversation that happens in the Discord. If you're not already there, come check it out. Come check it out. Yeah, macro bottom is not in yet. Good morning, Patty. Good morning, Chris. Good morning, Get Reckles. Or I guess, Chris, I know you are in the US of A, so good evening to you. All right, so back onto the topic of Bitcoin here. So we're still under the 200 week. We are in a consolidation. For me, this is an area that has a high likelihood of chop, okay? So I typically try to avoid chop. We are on a reaction to the downside, and we are rallying off of it, proving that this area is at least support. This area right here is kind of our now support range. I do think that we come down and test it again. A lot of people think that we're just going to, you know, bounce right up here. And that is possible. You do need to pay a lot of attention to what's going on the NASDAQ. But typically speaking, I think we're going to kind of lose this level and come down and test it. We don't have to, but I wouldn't be surprised if we do. So come down and test 19K again. You know, as we come and do the retest here of the reclaim on the NASDAQ. So be on the lookout for that. But short-term analysis, you know, you have to put those bias aside. The market doesn't have to do what you expect it to do. What we can look at, looking at the alphanumerics indicator, is we have this 7-day average, this exponential 7-day average. So this is the average price with an exponential curve of the price of Bitcoin. The last 2 days, we've managed to print, or I guess we just opened this day. So yesterday, we managed to print a candle that closed above the weekly average. So this is a very positive sign. And if you can continue to see candles close above the weekly average, there's a high likelihood that we can rally up to the monthly average. Okay, so right now we're sitting on top of the weekly average. If we spend 2 or 3 days sitting on top of the weekly average, we may just give a run, go for it, and try and hit that monthly average price. So be on the lookout for that as well. All right, so let's go to the weekly chart on Bitcoin. Weekly has about 2 days to close. It is looking like it is going to close below the 200 week, which is not ideal. Let's actually turn alphanumerics off for a second here, which is not ideal. But yeah, we have a range here that I've identified. This is around the $30,000 level. If we do go for a rally, if we do go for a run, you know, that 30K level is going to be very, very strong resistance. I would anticipate also that we run into quite a lot of resistance at around $28,000, but giving it that $30,000 room as well. watch for that. Now, if we get a reclaim of the 30, here's the bullish scenario. If we get a reclaim of the 30 and we're looking at the NASDAQ, and the NASDAQ is going through its reclaims, there's a chance that we do get a pretty significant bull trap. It's going to be something similar to the fractal we've been analyzing with Amazon. So let's take a look at the Amazon chart here for a sec. I'm not a big fractal guy. A lot of people were kind of messaging me like, hey, Blue, I thought you don't look at fractals. I never look at fractals alone, but they can give you context in where you are in a market cycle. A lot of people will pull a fractal and say, hey, look, we're printing this fractal. But they take out of context where that fractal occurred in a price cycle. And that's what fucks people up. That's what gets people to make really bad calls using fractals. But if you're looking at fractals in the point of view of market cycles, so like here was a previous market cycle top, and we have a market cycle top that matches a fractal of another market cycle top. Those are decent comparables because those are both the same context of human emotion. If you're looking at an accumulation range mid-cycle and comparing it to a market cycle top and calling it a fractal, you're going to have a bad time. So, yeah, well, the Amazon. And we'll go back to the .com bubble. I've shown this chart a few times. And I want to zoom in here. So basically, this is what I'm referring to. We kind of have a blow off top, right? A correction, a dead cat bounce on decreasing volume. So increasing volume into a blow off top. Okay. Decreasing volume with a dead cat bounce that prints a new all-time high. Okay. A relentless downtrend with one recovery that goes down and breaks below the market low of the original shakeout back here. Breaks below that, prints a new low in the local consolidation. It then goes for a rip up past all of these levels here and prints a new all-time high. So these things can happen. Be aware of them. And if we get a lot of cooperation inside of the NASDAQ, you're going to need to be laser focused on this fractal because it has potential to play out. And we could finish off the year with a new all-time high. And my God, will the bullish horns be blasting if that happens? To me, that will be my graceful exit from the market. I think that I will be reducing many positions and really embracing a long-term cash position, not only for future deployment, but also potential living expenses if times do become rather tight in the context of a recession. You know, building up that emergency fund so that you're able to move through life without having to panic on where your next paycheck will come from. So definitely hinting at building up that kind of cash position. So, you know, we can absolutely have that. And my God, we will have a very, very nice time trading this type of environment in the short term here in the jungle. So I'm waiting for a little bit more confirmation. I have not been posting setups. For those in the jungle being like, yo, what the hell, we're moving. Yes, we're moving. Crypto moves every fucking day. It moves up, it moves down, but you need to catch a trend. So I've been waiting for further confirmation. We're getting close to me posting setups. If you guys are interested in trading alongside the trades that I take, then join VIP. Links down in the description. We have only a few days left for the sales. So we have a coupon code BEAR, BEAR. Use the coupon code and receive 25% off any package that you choose. It is June 25th. That offer will be done in 5 days. So you're running out of time to take advantage on that offer. So yeah, come and take a look. you can also, there's a free trial too. If you join the Discord, you can try it out for free for 48 hours. So yeah, this is the fractal to pay attention to. So bull market with volume, bear market, dead cat bounce, new all-time high, low volume, then potential rally back to Bitcoin, blow off top on volume. Preliminary supply came a little bit early. Breakdown, all-time high with a dead cat on low volume. Right? A break, new low of the macro, of the original shakeout here. So if the shakeout, we'll do it exactly like I did it on Amazon. Breakout, new low on that, on the breakdown of the first shakeout. And now we're below. So if we reclaim these levels, if we get above 30K and we begin to show a lot of bullish price action, not only in Bitcoin and crypto, but in the NASDAQ and the S&P, then, you know, don't discount, don't fight the trend. If you're in an uptrend, you know, trade the uptrend, take profits, be aggressive, but understand that there is a potential for us to make a new all-time high and still reverse back down to the bearish side. So, you know, we have to entertain all of the possible ideas. All right, let's take a look at Ethereum. Actually, let's take a look at Bitcoin dominance first before we transition into the altcoins. Bitcoin dominance continuing to come down to my area, my little pocket of the retest here. So this is the area where I'm looking for a turnaround inside of the altcoin. So maybe we come down here, we rally a little bit harder in the altcoins, get our retest in the NASDAQ, our retest in Bitcoin, we rally off of this and continue to test it again. That would be a nice rotation inside of the market of crypto as we begin to put on a little bit more risk inside of the crypto markets. But yeah, let's take a look at Ethereum. Ethereum has been on, it has a little bit of a healthier chart on the smaller time frames. So, you know, we've got a much stronger candle above the 7-day average. So you can see the 7-day average on Bitcoin, it just kind of barely made it above, and it just kind of, it was almost a doji on Bitcoin. Let me show you exactly what I mean here. The 7-day average, it kind of just barely held on top there, just a little bit of a doji. And then on Ethereum, it was a pretty powerful candle. So again, this is telling us that retail hasn't given up. Retail is still chomping at the bit to getting exposure to crypto and, you know, buy the dip, catch exposure, go long, and, you know, all the power to them. You know, there's still lessons that need to be learned in this market. Bitcoin is the safest thing you could buy in terms of your investment. But let's go down to the smaller time frames and take a look at some of these reclaim areas. Go down to the hourly. Is that too small of a time frame? Let's try the hour. Let's try the 4 hour. And since we're doing reclaims, we don't need momentum. We'll turn alphanumerics off. But yeah, we posted this too. Just a very clean reclaim. Didn't take this trade, but it was a nice clean reclaim of this level. You can see the area where we broke down. These are great candles to watch out for, by the way. When you have a breakdown candle or a breakout candle, make note of those levels because those are important support and resistance levels. So we bounced, consolidated, held support, then capitulated down. That identifies our support level. We got a nice reclaim of that level. And now we're above the area of the resistance here currently. So if we can maintain on top of this level, which we have plenty of context for a retest, then we can continue to range higher. You've got this kind of inverse head and shoulders formation that has been created here for all the inverse head and shoulders people. Typically you're going to, you know, we'll have a breakout of the neckline. That will be a pretty large move. It'll probably carry us up to this resistance area right here. So, you know, $1,500 ETH, that'll get the narratives going. Fuck, crypto Twitter, man. Crypto Twitter is, you have to be very fucking careful on crypto Twitter because it is just toxic. It is toxic. You have people relentlessly shit posting in the bear markets, relentlessly shit posting in a downtrend, and you have all of the bulls just like dying inside. And they are just like being squashed down into their little box, never to be seen again. And then you get a green candle and they're like, fuck you, I told you we were bullish. I bought the dip. Did anybody else buy the dip? I bought the dip. What are you suckers doing not buying the dip? You better get in now before we go to fucking $5,000. Like, it is toxic. There's some alpha out there, but my God, the sentiment, just completely ignore sentiment on crypto Twitter. You are going to get chopped to bits if you spend time gauging sentiment on what you should be doing if you're spending any time on crypto Twitter. So be aware. Very toxic environment there. But there is, it's a good place to learn about new projects so that you can go and look at their websites and their tokenomics, but don't get the info solely on Twitter. Be careful who you follow. All right. Don't have a ton of time today, but we will take a look at a few more. So ETH, we're just watching these reclaims. We got to get these reclaims going. ZIL did a pretty silly move lately. Looks like we're coming in for a bullish cross on the daily here on ZIL. So that's a nice little move. I don't know if there's any of the Zilliqa crowd here, but we can take a look at this. We're looking to reclaim this level right here. If you can get above that, this move was pretty substantial. Now you do have to mitigate risk through size on something like this. This was a 50% move. You don't go, you almost can't even put a stop loss on this. So when you can't put a stop loss on a coin because it's so volatile, the only way that you can mitigate risk is by only putting in your stop loss amount. And then don't use a stop loss. If it's super volatile and it's going up and down 50%, it's just putting a fucking 10% stop on that. It's just guaranteed gonna get stopped out. So reduce your greed, and level up your intelligence and your smart approach, and just don't put a big size on it. Put a small size. When you're putting a 10% stop on Bitcoin, how much money are you going to lose? Whatever that number is, take that number, put it on Zilliqa, don't use a stop. Be careful with mitigating risk. Yeah, oh God, that's a good quote. Kato is saying from crypto Twitter, you're seeing all the posts like, what are you going to tell your kids when you didn't buy at these prices? Huh? What are you going to tell your kids? What are you going to tell your family? You didn't buy 3-digit ETH? Oh, Anon. Sir, so sorry. It's ridiculous. It is ridiculous, the sentiment of the herd sometimes. So you're bullish now? No. I mean, short-term bullish, yes. I've been talking about this for weeks, and I really try to communicate both sides. We've been talking about what to look for in the NASDAQ. I said, hey, we've had a pretty relentless shakeout. I want to see recovery in the NASDAQ. We're getting a recovery in the NASDAQ. We're looking at Bitcoin. Hey, I'm still macro bearish. I think Bitcoin's going to go to fucking 3K. It might take, and I think we're not going to see an all-time high in Bitcoin unless we print one in the coming months. I don't think we're going to see another all-time high in Bitcoin for 10 fucking years. If you think that's bullish, then I don't know what to tell you. But we have ebbs and flows. We have rallies and reactions within all of this. And we've been talking about the bounce potential here. And yes, I am, bullish. I will be looking for long positions. in a market that I think is going to nuke down and destroy many, many lives. You can call that bullish, I guess. But yeah, back to ETH. No, Zilliqa, we did ZIL. What else? What should we take a look at? I got a little bit of time here, so I'll just pick a few ones that you guys want to take a look at. So drop them in the chat here. There's always spot to dip. There's always they always spot the dip, don't they? Yeah, of course. Hindsight's 2020. You need to take your toxic crypto Twitter impersonation on the road. Is it that good? I'm gonna need help. I need a script. Come into the Discord. You know what? That could actually be fun. I need like all of the sayings. I need all of the memey bullshit sayings that crypto Twitter churns out on a daily basis so that I can just bang them off, go through them, and maybe I'll do like a YouTube short or something of how ridiculous crypto Twitter is. Celsius. So here's an example of one that you would really mitigate risk through size, because it is all over the fucking map. It is all over the fucking map. So, you know, these don't really qualify as a trade for me personally. And let me explain why. If you have, let's measure this move. It's about 250%. Impressive move, 250%. Okay. Now, let's take a look at Bitcoin. If you manage to get down here at this close, we're looking at a 15%. If you manage to just nail the bottom for whatever reason, we're looking at a 20%. Okay. 20%, 250%. You obviously want to be in Celsius, right? No. And here's why. With Celsius, the volatility is so extreme that your position size needs to be incredibly small. For you to mitigate risk appropriately, your position size has to be very, very small. So in knowing that, let's say you wanted to put a 10% stop, like maybe 10% stop is your typical stop. You're going to put, let's say, you know, $1,000. We'll just keep the math simple. You'll put $1,000 on Celsius, no stop loss. With Bitcoin, you can put 10 times that amount and you can put a 10% stop on it. So with Bitcoin, you can put a $10,000 trade on and have the exact same risk, except you have the liquidity, you have the ability to have a low spread, you have less kerfuckery, and you're able to, you know, control your emotions because it's moving a lot slower. A lot of people just, this is why they chase the altcoins, because they want 250%. But if you do that with a normal position size, you're going to get fucking wrecked. You're going to get wrecked. It's so risky to not mitigate risk with these things. Now, you can just, you know, buy spot and hold, but it's kind of the same. It's kind of the same as just getting a 20 to 25% move in Bitcoin with a stop loss than it is getting a 250% move without a stop loss. It's the same yield. You get the same amount of money. People don't do the math. They don't crunch the numbers. They don't figure it out for themselves. And they get, you know, they get an altcoin portfolio that they're looking at every day. Is it a good one? Was that a good plan? Did you make wise investment decisions? Let your portfolio tell you. I don't need to. Avalanche. Actually, let's go to the perp. That's where I had the drawings. Came down to the area of the support. People were calling me absolutely insane for drawing this line here. And look, not only did we come down to it, we traded below it. So obviously not that crazy. How did I come up with this line, by the way? Breakouts. Breakouts. Breakouts, breakdowns. Pay attention to breakouts. Pay attention to breakdowns. Look at this. We had a distribution, accumulation, breakout. We came all the way back down after we did this massive distributional structure. We came all the way back down to the area of the original breakout. This is what sucks about altcoins. They make you $1 million and they take it all away. Bitcoin doesn't do that. Ethereum doesn't do that. They don't take it all away, but altcoins will take it all away. So we're sitting here wanting to reclaim the area of the breakout. So if we can get on top of that, which it's looking decent, let's actually turn alpha numerics on and see how the momentum is doing. We're stronger than ETH. So Bitcoin is showing positivity. Ethereum is showing more positivity than Bitcoin. And Avalanche is showing more positivity than Ethereum. So we're getting that inverse effect from what we were seeing in the downtrend. So this is, again, showing us that retail is in control. There's still a lot of hope out there. There's not, people are still just swinging at the fences. They're risk on. They're risk on. This right here, this price action that we're seeing is proof enough to me that we are still inside of a distribution. We are still not in a distribution. We are still in markdown. And we have a very long road ahead of us of accumulation. Very long road ahead. You know, it pains me because I know how many people are going to get absolutely fucking wrecked in the coming years. They're just going to get so wrecked, and they're going to think that crypto sucks. And crypto doesn't suck. You're here for a reason. This technology exists and gets, you know, speculated upon for a reason. This is quite literally revolutionary technology. But a caveat to that is part of its properties are immutability and censorship resistance, and that just allows for fucking scams. So many scams. I'm not calling Avalanche a scam. I actually like the product, but it does hurt a lot of people. We have a lot of potential damage that can happen inside of the crypto market that ultimately will pop the bubble if the bubble has not already popped. I think we're getting to our kind of .com bubble conclusion here, and that's going to take a decade. It's going to take a decade of accumulation to repair. I am very, very crypto friend. I love crypto. I'm launching blockchain-based businesses. I want to operate a DAO. I want to operate a decentralized autonomous company. I'm crypto savvy. Want to be fully crypto native one day. Not use the banking system at all. And even I can see that we're nowhere near adoption. We're not ready. We have a lot of work to do. And the market participants are just pricing in bullshit. They're just pricing in bullshit, and they need to be taught a lesson. And the market is the ultimate teacher. So Avalanche, you know, as we can continue to reclaim these levels, we're getting close to the 30-day average. This is a kind of important level to overtake. We'll probably really begin to accelerate if we can get above this level of 25 bucks. Nice psychological level. Get above $25. We will begin to accelerate to the upside on that one with not a lot for resistance. There's really not a lot of resistance until you get to basically a 100% extension. Now, not financial advice. Please mitigate your risk. Choose how to trade this appropriately. If you don't know how to calculate positions, if you don't know how to set stop losses, if you don't know when is a good time to take profits or how much profits should be taken when certain targets are achieved, I encourage you to level up your education. You are in a trader's market. You are not in a bull market. You are not in a retail market. You are in a trader's market. If you don't know how to trade, you're going to get your ass handed to you. You don't have to learn from me, but you got to learn from somebody. So if you are interested, we still have that promotion going on. Use the coupon code BEAR on any of our packages listed below. Kind of sound like Cable Guy. You know, it's funny. It's funny that you say that because, you know, Jim Carrey was my childhood idol. My absolute childhood idol. When I was a kid, I watched every fucking Jim Carrey movie. I wanted to become an actor because of Jim Carrey. So it's funny that you say that I sound like Jim Carrey. That's I take that as an honor. All right, Matic. If we have time, do we have time? We have a little bit of time. Let's take a look at Matic. Matic's one that's gone up considerably as well. Let's take a look at the perpetual futures contracts on Matic. Pretty large move. It's ahead of the game. So Matic is really moving. Matic, it's interesting. It's interesting to see that. I guess because Matic had a head start in the bearish trend, so it's gotten a little bit more oversold. And we're overtaking the levels that I just talked about on Avalanche. So, you know, we could be seeing a similar rotation. Okay, we still have a little bit of work to do, but we're well above the daily average. We're well above the monthly average, and we're approaching the 50-day average on the exponential MAs here. So it's looking quite positive, getting ready for the bullish cross on the daily. So momentum is definitely here. I wouldn't enter at these levels. You know, I never enter on a rally. You always want to enter on a reaction. So when we take a look at the smaller time frames, let's take a look at the 4-hour here on Matic. We do want to enter maybe a retest of the EMAs back here, potentially even get a position back in this kind of liquidity zone back here. You can see we consolidated in this area for a bit. I would love to see us come back down to kind of 40 cents to look for a turnaround at that level. If we can come back down here, it's a bit of a stretch, but it's not impossible. If we can come back down here and look for the turnaround, that'll give us another swing for the break. Now, if that doesn't happen, what another possibility is we can just continue, overtake this level, and then test it as a reclaim. Then you can continue higher. But given the amount of volume that's come in here, we're seeing a lot of selling activity up into this resistance. I think a lot of supply has come in, at least on the perpetual contracts. There's a lot of shorts probably stacking up here. So I would be more inclined to think that we would come down for some sort of a retest before we overtake that level. All right, let's finish things off with the SPY. SPY, as we've said on previous streams, we were in the area of the bounce, huge bounce off of that level. Doesn't mean we can't come down and test it again. We've seen that in the past. You know, we saw a monthly candle here. We came up, we came back down and tested the mean. We've tested the mean on the S&P several times, okay? There's two kind of big areas. You know, we had the original shakeout, and then we had the COVID panic shakeout, but we've tested it here, 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 and we've also tested it here. So there's a lot of confidence at the mean of this channel, and we want to pay attention to that. We want to honor that, and we're seeing a little bit of a bounce. We're setting up for one hell of a bull trap, in my opinion. We are setting up for one hell of a bull trap. The fundamentals haven't changed. Money's getting more expensive, and the balance of the Fed is planned to be reduced. Fundamentals haven't changed. Supply on the market, in a market that will have decreased demand. Increased supply, decreased demand equals what? Markdown. So be prepared for the markdown event. We are being graced with potential exit material, exit bounces, reshuffling, reorganizations of the portfolio, some profitable trade setups. Then that's it, my friend. It's margarita time. It's time to chill out. It's Miller time. It's you know, take a break time, I think, for a while. Buy the puts and walk away. All right, that is all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. And if there are any other projects that you want me to take a look at, leave them in the Discord. Come into the Discord. I tell you guys to comment. It's for YouTube engagement. If you want to drive YouTube engagement and get this video out to people, I would much appreciate that with a like and a comment. But if you actually just want to hang out, talk about charts, ask about specific projects, then I highly encourage you to just join the Discord, because that's where the majority of the conversation is taking place. Don't be shy. Come say hi. All right. We will see you guys in the next one. Thank you all for joining in. Please trade safe. It is a jungle out there. Peace.